Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 1st, 2018 edition of Market Outlook. So market's definitely in a more defensive position in terms of equities. Let's take a look at what's happening here. Well, first of all, as we know, momentum often precedes price. And one of the things you can see here is our momentum indicators, right? This is real motion. Basically, the current levels across the board are sitting under their key moving averages. So at the moment, looking at the S&P, you can see our current readings are under both the 50-day of real motion and the 200. And the other thing to note is we actually confirmed a warning phase. So definite deterioration. We all closed under the 10-day moving averages in all the key indices. And of course, you can see across the board momentum, right? Despite the fact that price, right, hasn't really confirmed the breakdown in the Qs, momentum, right, we definitely broke down. Same story here in IWM, and you've got a much more serious situation in the Dow because we entered a distribution phase where we've now closed several days under the 200-day moving average. So there's no question that there's definite pressure on the markets. So it'll be interesting to see. We're definitely going to need some strength here to reverse this across the board. So moving on to the weekly charts here, you've got a different picture, although you do have some concern. So net, remember, momentum precedes price. That doesn't mean that you necessarily get an automatic sell signal. You need price confirmation. Now, on the weekly charts, a couple things to note. The IWM, right, has had some really good strength. So this momentum here for the weekly charts on the Russell 2000 still intact, right? You can see the 50-week of real motion nicely above the 200. And again, the closing price of the real motion indicator on the weekly chart here intact. Now, when I talk about some concerns, the NASDQ 100, which has been the leading index, you can see on a weekly basis, look at these highs, right? We made a high here, a high here, and a high here. And on momentum, we definitely have a divergence. Now, we haven't flipped beneath the 50-week of real motion. We're sort of holding on here. So it's really important that this NASDAQ holds up over the next couple of weeks and really doesn't start to fade. Now, you've got a different situation, of course, in the other indices, the S&P and the Dow, both in terms of price, right? The Dow here, the 239 level coincides with this 50-week moving average. So that is a real key support level. You can see we bounced off of it this week. And again, momentum, right? Even though we're above the 50-week in price, we're below that in real motion, and even weaker here in the S&P. So as you can see, more of a mixed bag in terms of both price action and momentum on the weekly charts. So our conclusion here, at the moment, momentum is showing some signs of weakness in aggregate across the board, but price movement has not confirmed on a longer term or weekly basis. Okay, the next thing I want to move on to is looking at volume. So we had been improving over the last several weeks, so certainly till the mid part of June. But we've got a different scenario now that has occurred. Take a look at this. You can see 3 to 4 distribution days and no accumulation. So that is definitely showing institutions have tremendous selling pressure here. That's not a good sign. Definite distribution while the market is sitting on important support levels across the board. Now, in some cases, we've already broken down. Now, for the week, right, you can see we've been down across the board for all the indices here. And what's interesting is, of course, year to date, we've got the Dow down on the year. Not surprising, that's the one that moved into a distribution phase. And listen, there's quite a spread here between the NASDQ 100 and the diamond. So there's a good 12% spread between the leading index and the lagging one, right? So the network effect with a lot of the NASDAQ stocks definitely continuing to play out, and pressure on the big multinational stocks here in the Dow Industrials. So net, this is also another negative. Okay, the next thing to focus on is just how the different sectors are doing. And one thing you can see for sure is that more conservative or flight to safety sectors definitely gained quite a bit this week, especially the utilities. So if you take a look, right, utilities here, right, in an accumulation phase, up 2.4% for the last 5 days, and was definitely the leading sector. Not a good sign for the market. We don't want to see utilities, which is considered flight to safety, as a leading index, so, or a leading sector. So there you have it. The other thing to note is semiconductors moved into a warning phase, right? So this has been the hot sector. It's definitely cooled off. It's speculative in nature. When spec sectors continue to be strong, that's a good sign for the overall market. And again, one of the worst performing sectors this week, and it definitely has put more pressure on the overall scenario for the market. So there you have it. And again, also retail, which we were hoping might pick up the slack, really got bashed this week, and it didn't do well on Friday. We were hoping that maybe the recent sell-off and the test of the 6-month calendar range might have offered support or potential bounce from there, and it actually ended up being one of the worst performers on Friday. Not a good sign either. So net, you can see the most important sector under pressure here. Let's also now take a look at some of the market hotspots, because what we're going to see here as well is that shipping has done extremely poorly. So that sort of goes in line with a global slowdown and pressure on international trade with potential tariff wars. So right here, the thing to note, right, the 5-day laggard here is shipping, down 4.78%. So that was one of the worst performing ETFs for across all ETFs. Not a good sign. Now, the other thing is that's also something to point out is that oil and energy definitely strong. You can see USO up 7.4% for the last 5 days, and that was the leading sector, along with the spike in volatilities with the sell-off. So slowdown definitely shows up with shipping getting hit. That is not a good sign overall. So pressure seems to be something that is working across the board in multiple ETFs. All right, so that's it for now. And good luck with your trading. Definitely keep an eye on the Dow. The 239 level in the DIA is really critical. That is the 50-week moving average. That's an important support number. 240 is the low from last week. And if it breaks that, it could certainly attack the 239 level. and a close under that would really not be good, because that would mean that we're in the Dow in a distribution phase on the weekly and on the daily charts as well. So again, see you next week, and good luck with your trading.